Gold prices were falling towards that $1,700 an ounce level. John, what's moving gold lower today here? Is it just a currency war with the dollar at this point, or is there something else going on?
It appears to be the case, Alex. I think the continuing tango with the euro is, without pause here. Certainly the dollar recapturing the 80 level on the trade-weighted index didn't help matters. And of course, we're skirting levels right around 1709, 1710, which, if sustained on a closing basis, could usher in a steeper decline in prices.
Exactly. We have a long holiday weekend coming up in the U.S. and that Eurozone finance minister meeting on Monday to talk about Greece. So how much of that is just selling as protection or perhaps technical selling like sell stops?
Well, one would think that actually going into such an uncertainty-laden weekend, they might load up on some just for protection because you never know what could come out of these meetings.
All right, so where do you think that maybe safe haven physical buying is going to jump in here?
Well, if it does at all, it could be triggered by an actual, headline default by Greece, if that were to occur before the deadline in March or by that deadline. But that would be short-lived. I think that the real impetus to buying safe haven type of assets would come if, in fact, the euro took a very, very different turn and looked like it was going to basically splinter into, national currencies again.
And then wrapping it up here, we did get the World Gold Council 2011 Gold Demand Trend Report. It was a very choppy year for gold. Chinese demand obviously was very strong, consuming over 700 tons of gold. Indian demand was very weak, consuming 933 tons of gold. What was your biggest takeaway of these numbers?
My biggest takeaway is that, unfortunately, on the fundamentals side of the equation, the gold market continues to show some metrics that are very disconcerting to me. Look, mine supply was up net 4%, and although scrap supply was slightly down by 29 tons, it was still skirting record highs in terms of year-on-year. Jewelry fabrication was down again. The biggest component here, ETF demand, which fell by more than half from 2010's levels, and it was at the lowest level since the product was actually launched 6-7 years ago, that is cause for concern because the market has become very much dependent on that type of demand.
What's the impact on prices here? Does that mean that prices are still supported, though, by continued investment demand, even though it's weaker? We won't just get that extra pop.
Well, indeed, the range continues to be in place because there's still this fear premium manifest in the market, and maintenance of that, is for the foreseeable future very much in place. But there's also scope, of course, for that decline towards that 1250 to 1420 type of level, which certainly wouldn't do, fatal damage to the market, but it would bring prices more in line with, with fundamentals that we just cited.
All right, thanks, John. I really appreciate it. So gold demand is a very choppy picture right now. Gold continues to stay range bound.